if we understand that global debt is going to continue to surge out of control, and it is, if we understand that this mechanism is not going to stop, what do you want to do? What do you want to do? You want to take advantage of it, right? And there are multiple ways to do it. I mean, you want to own physical gold and silver. That's my thing. I don't sell this stuff. So people say, oh, Greg, I don't make any money off of telling people how I feel with regard to gold and silver. I just feel that's the way that people should be investing in these things because it's an anti-debt unit. This mechanism of risk on is going to turn risk off. And as you know, cash doesn't fly away to money heaven. It just moves from one set of assets into another. It's just so easy to understand how this is eventually going to play out. The debt market is going to implode. When? I say probably looking at after the selection, the presidential selection, maybe 2025, we're going to see things change.
In the financial markets, where uncertainty looms large and economic indicators send tremors through investors' confidence, Gregory Mannarino's voice emerges as a beacon of caution and foresight. Often dubbed the Robinhood of Wall Street, Mannarino's advocacy for investing in physical gold and silver counters the looming specter of currency devaluation and hyperinflation. Central to Mannarino's thesis is the notion that gold and silver represent tangible anti-debt assets capable of retaining their value amidst the potential implosion of the debt market. His rationale resonates deeply after a staggering milestone. The United States national debt has breached the $34.4 trillion mark, marking a troubling trend of approximately $1 trillion added every 100 days. This relentless ascent has rattled financial markets and ignited profound concerns about the nation's long-term fiscal stability. Echoing Mannarino's sentiment, Bank of America investment strategist Michael Hartnett predicts that this 100-day trajectory will persist, pushing the debt from $34 trillion to $35 trillion. Such projections underscore the gravity of the situation and reinforce the urgency for prudent financial strategies. Indeed, the repercussions of the U.S. debt crisis reverberate far beyond the corridors of government power. Financial markets respond with palpable unease as investors scramble for refuge against the potential erosion of the U.S. dollar's strength. This flight to safety manifests in the resurgent demand for traditional havens like gold, which has surged by 6% in the past 6 months alone. For Mannarino, the machinations of central banks loom large in this narrative. He contends these institutions wield considerable economic influence. By betting against the tide of debt and embracing gold and silver, individuals can position themselves against the maneuvers of central banks, thereby safeguarding their wealth from systemic risks. Join us as we explore the insights shared by Gregory Mannarino. Stay updated by subscribing to our channel and activating notifications. Thank you.
I see more and more propaganda, man, more distractions, more deceptions, more look here, don't look over here. Look, this thing is coming apart, and it's coming apart really fast. I mean, this is a global situation here, and the world economy, I mean, look, just people who need to do their own research on this, don't take my word for a damn thing, okay? The world economy today could not possibly be worse off, and it's going to get much worse from here. We are seeing a phenomenon occur that I think most of us, people like you and me and people that follow our work, had expected here. We are witnessing a surge in global debt. I think more so, honestly, than even we had perceived it would go. This mechanism of war and pulling more cash into the now by slaughtering fellow citizens around the world here, all the lies and distractions and, oh, it's this, it's that. And, all of this is just a grand design to keep people not understanding what's happening to them. I mean, look, you want to look at some basic stuff here in the United States. The economic news could not possibly be worse. Round after round after round of it just doesn't stop. And as I've been explaining to people for I don't know how long now, the worse this gets, the higher the stock market is going to go. And the mechanism for now, all right, this is going to change, and it's going to change but fast at one particular time. But the game remains risk on. And how the market is reading this is, okay, fine, look, everything is coming apart. Central banks colluding with our so-called representatives around the world are going to find every mechanism on this earth and off this earth to continue to inflate, because that's their strength. Central bank's power resides in one thing. You know what that one thing is? That it's their ability to inflate, to create debt. They're in their end game. They're in their end stage here. And people are paying the price around the world, not just here in the United States. And I mean, this is just the opening act where this is eventually going to go. The game with the market is pretty obvious. It remains risk on. meaning cash is making its way into the stock market on the back of suppressed rates, global debt surging out of control. You got to be on the opposite side of that trade, in my opinion. You know what I'm going to tell you? This is my favorite asset on the face of the earth. I did a video about it this morning. As a matter of fact, I'm getting so many haters, bro. You don't even know. Over the last, I don't know, a few weeks, and over this weekend especially, oh, Greg, you're wrong on gold, you're wrong on silver. These are worthless entities. They're not going anywhere. Stop telling people that this is what, look, first of all, I'm not telling people what they should do. I'm telling people what I'm doing. I think people need to do their own research here. If we understand, it's such a basic concept that it drives me nuts. If we understand that global debt is going to continue to surge out of control, and it is, if we understand that this mechanism is not going to stop, what do you want to do? What do you want to do? You want to take advantage of it, right? And there are multiple ways to do it. I mean, you want to own physical, gold and silver. That's my thing. I don't sell this stuff. So people say, oh, Greg, I don't make any money off of telling people how I feel with regard to gold and silver. I just feel that's the way that the people should be investing in these things because it's an anti-debt unit. Eventually, this mechanism of risk on is going to turn risk off. And as you know, cash doesn't fly away to money heaven. It just moves from one set of assets into another. It's just so easy to understand how this is eventually going to play out. The debt market is going to implode. When? I say probably looking at after the selection, the presidential selection, maybe 2025, we're going to see things change. We'll see how that plays out here. But eventually, this hyper bubble that we have in the debt market, and the paradox here is, and as you know this too, even though the world today is saturated or appears to be debt saturated, there's not enough of it for the system to function. It operates in a constant deficit state. That's what creates demand for more debt, the fact that it is in a perpetual deficit state. And this mechanism, again, plays right into what central banks are trying to pull off. I mean, they're playing a very long game. And these central banks are in full control of what's happening here. And there's no way to stop it except one. That is, on our side, betting against the debt, becoming our own central banks, holding gold, silver.
The landscape for U.S. regional lenders remains fraught with challenges as they grapple with mounting deposit costs and the specter of risky office building loans. These hurdles persist a year after witnessing the most substantial bank failures since the financial crisis 2008. The abrupt collapses of three banks, Silicon Valley and Signature in March 2023, followed by the First Republic in May of the same year, have cast a glaring spotlight on the efficacy of lenders' risk management practices concerning assets and liquidity. These failures unfolded against the backdrop of the Federal Reserve's aggressive interest rate hike campaign aimed at reining in surging inflation. Gregory Mannarino has sounded the alarm on the systemic issues plaguing the banking sector, which have precipitated the demise of smaller institutions. Mannarino's perspective underscores the situation's urgency, as he advises individuals to consider withdrawing their funds from these vulnerable institutions. This advice extends even to behemoths like J.P. Morgan, as low interest rates and the looming threat of inflation chip away at the value of savings. Let's get back to the interview.
There's a problem here in the banking system that is no deposits, no loans, no deals. So I was like, this just isn't right here. So then a couple of months later, maybe 2 or 3, we started seeing the failures of these smaller institutions. It's not over. Okay, they're burying that for now. And I've been urging people to get their cash out of these institutions. If they need to put their cash in, first of all, don't keep a single dime in any of these institutions. I don't care if it's a mega bank like J.P. Morgan that you don't need to have in there. First of all, they're not paying you anything. You're going to be robbed blind by any interest earning account right now pretty much isn't even remotely keeping up with the rate of inflation. It's theft on an insane scale, but people don't understand that. But anyway, there's no doubt at all that this is a deliberate consolidation of the system. We are going to see much more of that. Jamie Dimon, last week or the week before that, he came out, he's a creature too. I refer to them as creatures, you know that. He said we should expect this. I mean, you got to be, if you don't see what's happening, there's something wrong with you. You're not paying attention. That's all I want people to do. What do I say all the time? Raise your awareness. Raise your awareness, because they tell you what's going to happen before it does. Generally, all you got to do is listen. Listen to the little hints that we're getting here. You know, these multi-billionaires now, CEOs, senators dumping billions of dollars worth of stock. Why? Because they think it's fun. And while the market's hitting record high, there's just so much more behind all of this here. But with regard to commercial real estate, and I've been telling people this too, this is right now a black hole. No one knows what's there, but what we do know is there's a problem there. And I think this is going to develop further moving forward. And I think without any, in fact, I know beyond any shadow of any doubt, we are going to see the smaller institutions get gobbled up by the bigger ones. And then when this whole thing eventually comes down, what they're going to do is what they did last time. They're going to set up a scapegoat. They're going to say, okay, well, they're going to allow, in my opinion, we're going to see a major institution fail, a major Wall Street institution. And I think if I had to pick one, you probably know what I'm going to say. It's Bank of America. Bank of America on paper is the worst of the big institutions right now. And they're probably setting that institution to be absorbed, or other institutions will probably chop that up and absorb the good assets. Then we, the people, are going to have to eat all the bad assets, as they always do here. That's what they did last time as well. And that's what they're setting up here. And because, again, they have to do this. Oh, look what we did. We allowed this institution to fail, because this whole system, first of all, this entire thing is a false flag that we're seeing here. The thing is coming apart very, very fast. The illusion of the stock market is being maintained. I talk about this all the time. People see the stock market higher, record high. Oh, wow, everything must be great. The economy is booming. We couldn't be better off, you know. But what we're really seeing here is a mechanism to keep it propped up via suppressed rates. We got, you know, this creation of a neo-feudal system that is obviously in full swing. And then with regard to what you said earlier about a lifeline to the Federal Reserve, this is never going to stop. There's so many other facets to this. The Federal Reserve, as most major institutions, has two balance sheets. All right. They have a balance sheet that's public. We're allowed to see that one. And then there's one we're not allowed to see, stuff that's off balance sheet that they do. Now, there is no way that the Federal Reserve is going to allow JP Morgan, Goldman Sachs, all the super institutions to fail. They're going to have a direct main line to whatever the Federal Reserve wants to do to keep the system propped up here. The Federal Reserve needs a conduit to pump the system as well, and they're going to do it. They're doing it on their own. I mean, when people just don't understand the concept, and this drives me crazy. When the Fed is going to cut rates soon. I have no doubt about it. I know I get a lot of pushback from people that say I'm going to be wrong on this, but I can't see it another way, because, again, this would allow the Fed in this case to continue to inflate, which is their goal. Their goal is to continue to issue debt. Now,
considering the continued escalation of the United States national debt and the potential implications for long-term fiscal stability, what policy measures should be prioritized to address this issue and mitigate its impact on the economy? Share your thoughts in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.